what helps gold is the Fed just doing nothing. And in fact, even if the Fed were to notch rates up a bit, maybe 25 or 50 basis points, that's still bullish for gold because inflation is going to be so much higher than what the market's expected that real rates are collapsing. They're collapsing right now. We're 2026 is probably going to be the biggest annual increase in the CPI in decades. It's going to be bigger than anything we saw under Biden. And it's not going to stop in 2026. It's going to continue. And the Fed does not have the ability, really, to raise rates sufficient enough to rein it in. And that is extremely bullish for gold.
During the interview, Peter Schiff explains that the overall market is still very fragile. He says that rising interest rates don't fix the problem. They actually make things worse by increasing borrowing costs and putting more pressure on stocks, which raises the risk of a market decline. He also points out that politicians often use the stock market as proof that the economy is doing well. But according to Schiff, the real data tells a different story. He believes that economic growth, job creation, and overall financial stability have been gradually weakening over time. This trend, he says, has continued across different administrations, including both Donald Trump and Joe Biden. Schiff argues that the root of the problem isn't any single leader, but long-term policies that haven't changed, such as heavy government spending, constant budget deficits, and keeping interest rates artificially low for too long. These decisions, he says, have created a weak economic foundation where each new cycle is less stable than the one before. Now let's hear what he's about to say.
Well, I think it would have been bad even if Harris had won. I think the trajectory was down and Trump hasn't done anything to alter that trajectory. The problem is big governments and excess government spending and artificially low interest rates. And, all those policies have continued. They've continued from president to president, regardless of party. That's why every election turns they always throw out the incumbents because the economy is bad. And so they blame whoever's, at the top of the ticket. That's why Trump won in 2016, because the economy was lousy and they didn't want 4 more years. So they didn't vote for Hillary. They voted for Trump. And then after 4 years of Trump, they voted for Biden because the economy got worse. So they voted for change. And then after 4 years of Biden, the economy was worse still. So they went back to Trump. And in 2028, they're going to go for whoever the Democrats nominate because the economy will be worse. And the problem is the party that's in power has to try to sell a lie. They have to tell everybody the economy is great so they can take credit for it. But it's hard to tell people that a lousy economy is great when they're living in it. And it frustrates voters to be lied to like that. It's much easier to tell a different lie that, yes, the economy is lousy, but I'm going to fix it. I'm going to make it better. See, at least that's a believable lie because you acknowledge the truth that the economy sucks. You just lie that you're going to make it better. And that's the lie that the voters will go for. They'd rather do that than reelect the party that's telling them that a lousy economy is good.
I mean, I don't know. What would be kind of like the analog for what we're seeing in the markets today?
Well, I think the overall market is very vulnerable here because the market was very expensive. And even after this 10% decline, the market is still very expensive. And as interest rates go up, that makes it even more expensive. So I think there's a lot of risk underneath the market, particularly the NASDAQ has a lot of air underneath it, and it could really fall, into an air pocket. So, obviously the Trump administration is going to be very cognizant of the level of the market. And that may be the breaking point for Trump. He was bragging about how the Dow was at 50,000 and now we're barely above 45,000. But, once we get down to 44,000, that's where it was when he was sworn in. So we drop another 1,000 points and now the Dow is going to go negative since Trump became president. And, one of my favorite lies that Trump tells, only because it's so ridiculous and he keeps repeating it. Trump says that everybody told him, sir, we'll never get to 50,000. No, that's impossible. That's way too high. I mean, we can't do it in just 4 years. You can't do it, sir. It'd be impossible. Yet I did it in 1 year. Yeah, but the move from 44,000 to 50,000 is 13%. Nobody would have told Trump that it was impossible for the Dow to rise by 13% over a 4-year period. I mean, people would be very disappointed if they only got 3% a year out of the Dow. So nobody told Trump that that was impossible. He just made that up. But when the Dow goes back down and it's lower than it was when he took office, that's going to be a problem when you've kind of laid it all on the stock market and said the stock market is the barometer of my presidency and a measure of my success. I mean, the stock market is already weaker under Trump than it was under Biden. In fact, everything is weaker under Trump than it was under Biden. GDP grew last year at 2.2%. Biden's worst year was 2.5%. During 2025, Trump economy added 150,000 jobs, something like that. Half of them in healthcare. Biden added over 2 million during his final year, 2024. So, there's no numbers where you can show that the economy is better now than it was under Biden. In fact, all the numbers show that it's worse. Yet, according to Trump, when Biden was president, we had the worst economy in the history of the world. But now we have the greatest economy in the history of the world. So even though the greatest economy is worse than the worst economy.
Peter Schiff, a well-known economist and financial analyst, thinks this is only the start. He contends that the current financial system is under tremendous strain and that the current state of affairs is a sign of far more significant developments to come. Schiff claims that recent gold declines are really transient corrections brought on by changes in liquidity and market misunderstandings of central bank activities rather being indicators of weakness. From a broader perspective, Schiff highlights how central banks around the world are gradually reducing their reliance on the US dollar and increasing their gold reserves. This trend, he says, reflects a loss of confidence in fiat currencies and signals a major shift in the global monetary system. Looking ahead, Schiff emphasizes that whether global tensions ease or escalate, gold remains well positioned. A short-term calm could reduce pressure on policymakers, but prolonged instability would likely fuel inflation further, strengthening gold's appeal even more. In his view, the underlying fundamentals are firmly in place for a powerful move higher.
I think so. I think central banks have been rotating from dollars to gold, and now investors are rotating from Bitcoin to gold. Central bankers were never in Bitcoin, but I do think a lot of investors in the last couple of years piled into Bitcoin, especially once Trump was elected. And now they just want to get out. Now everybody, all the Bitcoin bulls are in, and now they need to get out. And the problem is going to be, how are they going to get out? Who's going to buy the Bitcoin that they want to sell? If there's not going to be a Bitcoin strategic reserve, if the government is not going to use taxpayer money to buy Bitcoin, then who's going to buy it? They're also, they just announced yesterday that the Fannie and Freddie are going to guarantee mortgages where the down payments are just Bitcoin, and they're borrowing against their Bitcoin to fund the down payment. I think the primary motivation for doing something that stupid is they're trying to let people buy houses without selling Bitcoin. They're trying to keep the selling pressure off of Bitcoin by telling people, hey, you can buy a house and you don't have to sell any of your Bitcoin. You can just pledge your Bitcoin, and then you could use that as your down payment. And that will keep some Bitcoin off the market. Now, I don't think it's going to keep enough Bitcoin off the market to prevent the crash. That's coming. Yeah, and I think it's going to recover the ground that it lost maybe as quickly as it lost it. I think this is a real head fake move. It's liquidity driven. Mm-hmm. And also, a lot of people got caught by surprise by the Fed backing away from rate cuts, and in fact now talking about hikes, and that caused a big sell-off in gold. But gold does not need the Fed to cut rates. What helps gold is the Fed just doing nothing. And in fact, even if the Fed were to notch rates up a bit, maybe 25 or 50 basis points, that's still bullish for gold, because inflation is going to be so much higher than what the market's expected that real rates are collapsing. They're collapsing right now. We're 2026 is probably going to be the biggest annual increase in the CPI in decades. It's going to be bigger than anything we saw under Biden. And it's not going to stop in 2026. It's going to continue. And the Fed does not have the ability, really, to raise rates sufficient enough to rein it in. And that is extremely bullish for gold. Well, I think if the war ended tomorrow, gold would rip, right? Because then oil prices would come down somewhat. They wouldn't come down to where they started, but they'd come off. And now the pressure publicly would be off the Fed to hike rates, and maybe they could talk more about rate cuts. But the way the markets are trading right now, if the hostilities ended and there was peace, gold would go up maybe $300, $400, $500 like right away. So, but I do think ultimately the war is better for gold than peace. I think gold goes up long-term regardless. But in my mind, the longer the war continues, the higher the price of gold. And eventually, gold traders are going to shake this off and stop selling gold every time the war escalates. They're going to start buying it because war means weaker economies, bigger deficits, and higher inflation. And that's why you buy gold. That's music to the gold investors' ears. That's the whole point of owning gold. And what matters is not nominal rates, but real rates. And if inflation goes up to 10% and the Fed's still sitting at 3.5%, and you have negative 6.5% interest rates, gold loves that. And gold's going much, much higher. So, buy into the gold, buy into the mining stocks, take the gifts that the market gives you.
In basic terms, Peter Schiff is cautioning that although the stock market appears solid on the surface, it is actually a lot weaker than people believe. He clarifies that higher interest rates just increase the pressure on stocks, which are still expensive even after a discernible decline. Higher rates increase the cost of borrowing and make stocks less appealing, raising the possibility of a more significant market collapse. Schiff then turns to politics, making a more general statement with instances involving Joe Biden and Donald Trump. He contends that politicians frequently claim credit for increases in the stock market and present them as evidence of a strong economy. But he thinks this is deceptive. He claims that regardless of who's in charge, the economy has actually been deteriorating over time when you look at genuine economic statistics like GDP growth and employment creation. He explains that the real issue is not about one specific leader, but about long-term policies that both parties continue to follow. These include excessive government spending, growing national debt, and keeping interest rates artificially low for too long. In Schiff's view, these policies have created an unstable economic system where each cycle becomes weaker than the last. So even when there are short-term improvements, the overall direction is still negative. Thank you for watching and see you in the next video.